There is a lot of activity happening in rural real estate, and this is despite the COVID-19 lockdown. Rural real estate has continued a upward swing with the recent REINZ, this is the Real Estate Institute of New Zealand statistics, saying that 386 farms sold from June to August this year, and that was the best 3-month period since 2016. I'm wondering though, has this got anything to do with a bit of a damming up with this lockdown? And joining us now is Property Brokers Rural General Manager Conrad Wilkshire. Evening, Conrad. What's going
Evening,
on?
Sarah.
Is this really just a flow-on effect from the lockdown, or are we seriously seeing some hot demand?
Oh, no, there's definitely a rubber band effect from the COVID situation, no question about that. Compared to the city, and particularly Auckland, which is probably more of a Shanghai effect, there's definitely a rubber band in terms of the sales coming through for New Zealand rural land sales. So not only July was very good and August has been better, but you've got to remember there was you can't really stop a market. And actually Tim Morton often says this, like if you look back, whether it's the GFC or whatever, you have these big events, but ultimately the market is still the market. And we've seen an effect with that dam effect you spoke about play through. So, you've got to look at the annualised sales, not just the last 3 months, and keep an eye on that because that's telling the whole story. But there's no question that, we should take a lot of confidence from the fact that people still have goals, they still have objectives, and real estate's still happening as a consequence.
Okay, so 12 out of 14 regions have shown this increase in farm sales. Bay of Plenty and Nelson dropped away. Why in those particular areas was there that drop-off, do you think?
Oh, look, I couldn't speak to that individually, but both those areas have strong horticulture influence, and there is always seasonality. And I think the other thing to remember in all these regions, we're only ever talking about a handful of sales. And particularly in dairy, but horticulture too. So, there's only ever so many sales. So there's always a bit of seasonality when you look at that data month on month or even over a 3-month period.
I think last time we spoke, there's a lot to do with confidence in the market. This is from a payout perspective with dairy right through to where regulations might land. How are you finding that the risk adverse getting back into the market as such, especially pre-election? Yeah.
If I sort of zero in on the dairy market, for example, there's $11 billion been returned to New Zealand farmers through Fonterra alone this last season. And so that's probably, and that's one of the 4th best payouts in Fonterra's history. You look at that and you compare that against the confidence surveys, the Rubber Bank confidence surveys that have been commented on. There is a real disconnect between that and what actually is going on. There's actually what you've got now is a strong value story where you are seeing the trending. There has been a reset in dairy farm prices. There's no question about that. And if you, again, take out a couple of outliers on dairy sales, the national median is much more closer to 30 than it is 40,000 per hectare. But the underlying returns have been improving. So if you look at dairy, as New Zealand dairy as an example, yes, sure, there are regulatory headwinds, and there's been some, real challenges put in front of farmers that they have to face into, and they continue to do that and have been for a while. But if you actually roll a big line under it, that's one of the most interesting investment stories going, where everywhere else you're seeing yields contracting, yet the reset is already present in the market, yet the returns are improving or certainly very solid, and the forward outlook's very good. So you've got some of the best underlying returns. So if you're buying a farm for the first time, and I've reviewed a couple of case studies of that, they're getting really good returns. And if you're in Westland at the moment with some of their advances and you're in your first farm, you're off to a flyer and you can get in there on very good price points. So there's always been those opportunities for first farms. They're still there. And in fact, I'd argue the value opportunities around the country, if you're prepared to have a look at some of that second and third tier country, they're quite amazing compared to where they might have been, say, 5 years ago.
What are some of those key things you say that the gap has moved in terms of, first farms and younger people getting into the market? Conrad, what would be sort of some of your advice on how that is actually starting to ramp up and support first farm buyers?
Obviously, the lending criteria today, while the money's never been cheaper, accessing credit probably hasn't never been harder in some respects. Though I will say that there's plenty of examples of people always beating the odds, and I haven't spoken to any farmer that said it was easy getting to their first farm. And so I think really what the opportunity now is, there's a lot more, the underlying interest rates are there, so there's opportunity sometimes. We're seeing examples of people coming along with equity partnerships or leasing as an interim step and getting their first start. And there's all kinds of ways in which that can happen now that simply weren't available, say, 5 years ago. So there is actually real interest in there to actually look at putting money back into farming, and there is a lot of sensible ways you can go about doing that.
Lifestyle, Canterbury particularly. Hey, we saw the writing on the wall. Expats wanted to come home. They're still coming home in their droves, let alone all those people, cooped up over lockdown, wanting to get out in the country. Do you think there'll be a swing back when people realise how hard it is and then the market peeps off and there's noticeable? That's what I've decided I'm counting on, Conrad.
Well, if you consider the typhoon we've had in the Manawatu and the swamp I've got to navigate on my lifestyle block with my ride on lawnmower, which many farmers will be smirking about, the reality is that a lifestyle does have its challenges, but it's got its rewards. And I think we're seeing a massive shift in lifestyle. I don't think it's temporary. You look at the zoning and what's going on, people really enjoy the space, and it's often a lot of people's dream to have that little bit of extra ground. And so I don't think that's going away. And what I think the effect you're seeing in lifestyle is you're actually seeing, and I think I've spoken about this previously, the regulations have changed, and it's allowed a lot of people into the market through KiwiSaver, so into their first home, and they're buying the properties that people are using as their leverage into the lifestyle block. And certainly lifestyle blocks probably turn over every 7 years, but so do houses.
It's interesting, eh? Maybe the Kiwi dream has gone from quarter acre to 4,000 square, 4 hectare block. New Zealanders, we like our space. We're actually quite private people, I think.
Yeah. I've got neighbours all around me on these lifestyle blocks. It's a smaller one that I used to be on. And everybody's got chickens except us, and they've all got veggie pods and gardens, and they're right into it. But I think we'll still go to New World on Saturday as well. Yeah,
I think that you end up with the oversupply of the eggs because they've sort of haven't quite predicted how much they produce and how much
exactly.
they. Hey, Conrad, thank you so much for joining Sarah's Country. Great to have an update there on the rural real estate market. Conrad Wilkshire is the Rural General Manager for Property Brokers. This is Sarah's Country.